Ladies and gentlemen, it is happening right now. We've just got massive news what happened with the banks today. Bank stocks cratered as CEOs came out and warned there's going to be massive real estate loan losses coming very soon. On top of this, we got mass layoffs happening right now. And on top of this, we got news from Saudi Arabia and what's happening with the BRICS bank. So everyone, we've got a lot of important news to cover. So let's not waste any time. Let's get straight into the news, the facts, and the data. So look at this, everyone. US banks sink on concerns about office real estate loan. So this is what we've been talking about all along, everybody. And I wish it could happen overnight. I know a lot of you are getting very impatient, wondering why isn't the crash happening now? You see all the fundamentals telling you that the market should be at least correcting right now, but it's not happening. Well, unfortunately, people, these things take a long time to play out. And I know on social media, people's attention spans are very short and they want things to happen within an hour. But don't worry, we are in the early process of this happening. But some crashes, just like 2008, it took 4 years for the markets to hit from the peak to the bottom. So you got to keep following the facts and following the data to figure out what's really going on. And people, it's not looking good. So shares of large and mid-sized US banks sharply underperformed the broader market on Wednesday, with the S&P 500 banks index closing down 2%, while the benchmark S&P 500 index fell 0.6%. With worries about commercial real estate loans in focus among bank investors. So this is why you can't just look at the indexes. You may look at the S&P 500 index or the NASDAQ and say, okay, down just 0.6%. The stock market's doing great today. What you really need to do is look at each sector. Look for hidden gems. Look what's really happening in different industries. Because some days the S&P 500 could be positive, but there may be some areas that are down 5%. Investors are worried about potential losses among banks from office real estate loans after comments from executives, including Wells Fargo chief executive and also Blackstone president. Wow, everyone. So there's some big players here at this conference admitting there is going to be trouble ahead. Scar said on Wednesday that there'll be losses in office loan sector and that the bank was proactively managing its portfolio while it look to reassure investors that it's not overtly concentrated in that area. Now, having a lot of these bank executives, they're very worried because we just had a bank run, we just had a banking crisis. I don't think it's over, but a lot of the masses thinks it's over and they do not want to spark fear again. So they're telling all their investors and they're telling all their customers, don't worry, this is a very small part of our portfolio, but people, the real estate sector makes up a huge part of the bank's portfolio, so I'm not buying it at all. But what sectors exactly are doing the worst? Gray talked about unprecedented weakness in older office buildings while noting that this segment currently makes up less than 2% of the company's equity portfolio in real estate. But there's much more going on than that, everyone. Vacancies are 20+%, rents are declining, companies are now obviously thinking about their space needs in light of remote work and economic climate that's ahead. So this is some very good insights here, everyone. Vacancy rates are 20% plus. We saw some areas like, for example, in San Francisco, vacancy rates are 60% plus. Rents are declining. A lot of these companies, they're finding that they can do flexible working arrangements or hot desking and have less need for real estate. And so this is causing rents to decline. And when a building's rent goes down, when investors go to look to buy that building to see how much cash flow they can get, if the cash flow is not there, these investors won't be buying. And I think this trend of work from home or hybrid work is only going to continue. And there continues to be more rapid advancement in artificial intelligence, which I'm very worried about. There's going to be more layoffs and more automation. So they said continued concerns over loans made to office market hurt bank stocks broadly on Wednesday, citing the Wells Fargo comments. They said there is going to be people that suffer even if Wells Fargo is diversified. But what you're probably wanting to know is what banks were hit the hardest. Wells Fargo ended the session down 2.9%, while Morgan Stanley dropped 2% and Bank of America fell 1.7%. Goldman Sachs and JP Morgan Chase lost 1.3%, and Citigroup shares closed down 0.9%, and Blackstone shares ended 0.9% as well. Now, what we've been seeing is there's been more weakness in the regional bank sector, and they were hit much harder than this. Regional lenders came under more pressure, with KeyCorp falling 5.9% as the biggest decline in the S&P Bank Index, followed by Zions 5.6% drop and Citizens Financial 5% decline. But they actually left one out here. I don't know why they did it, everyone. Are they trying to hide something? We also saw PacWest shares fall 5.5% as well. And on top of of all of this, like I'm trying to warn people, bank deposits are continuing to fall every single month. So also on Wednesday, the Federal Deposit Insurance Corporation said US banks' total deposits declined by a record 2.5% in the first quarter. So this is absolutely massive, everyone. And this is just another reason why bank stocks fell today, is because we're starting to see more and more bank runs happen, even though the media isn't reporting it. But on top of all of this, we got some new economic data, which is hinting there's going to be another Federal Reserve rate hike next month. And every single rate hike we get is going to mean these assets on these banks' balance sheet continue to fall lower and lower. So hurting the broader market as well, we're due to ahead of lawmakers vote on a deal to raise the US debt ceiling and unexpectedly strong labor market data that reinforce bets for more Federal Reserve interest rate hikes. So that's exactly right. If the US Treasury starts issuing more and more bonds into the bonds market, that means interest rates are going to continue to keep going higher on bonds. That hurts the bond prices on these banks' balance sheets. And we also did get more data that job openings hit 10.1 million, meaning the economy is obviously overheating and the Federal Reserve has not done their job. They need to keep on lifting interest rates, but they're very, very scared because they know if they do, we're going to see a financial crisis. But on top of all that, First Republic, 1,000 jobs cut by new owner JP Morgan. So absolutely no mercy by JP Morgan. I think they're going to have their eyes on more and more small banks, even though they legally shouldn't be buying more of these regional banks. They're going in there, buying them for pennies on the dollar. Taxpayers are funding their losses and they're coming in and slashing jobs. But people, there's a huge development happening now with the BRICS Bank, and they're making a massive move with Saudi Arabia that's going to rival the Western banking system. So look at this, everyone. BRICS Bank wants new members as Saudi Arabia looks to join. The new development bank lender created by BRICS group of nations will widen its membership as it seeks to boost its capital and counter the influence of Western-dominated multilateral banks. This is going to be an absolute massive shakeup, everyone, and a huge fight for global dominance in the banking sector. And I don't know how this is going to play out, but let's keep reading. The lender formed by Brazil, Russia, India, China, and South Africa will look at increasing the diversity of its members in terms of geography, development stages, and on the size of countries. Saudi Arabia is the latest to discuss joining the bank, the Financial Times has reported, a move that will give the lender more financial muscle. The bank was created in 2014 as a counterweight to the International Monetary Fund and the World Bank. And we are seeing an absolute stampede of countries that are joining this bank now. The bank's membership is open to any country within the United Nations. Bangladesh and United Arab Emirates became members in 2021, while Egypt joined in February. Rousseff, Brazil's former president, said the new members would contribute resources to the bank to support the diversification of its portfolio and increase its capacity to mobilize funds. And they're already making big progress. The bank is on track to meet its goal of 30% of its project's funding in local currencies by 2026. And they said at the briefing the current level is about 22%. So everyone, I know we're thinking, well, okay, what does all this mean for you in simple terms? Well, what this means is this banking crisis that we've been seeing, it is not over yet. Just like in the markets when there's volatility, there's also volatility during financial crises. I think there's still going to be more losses for the banks. They are going to be in trouble, but we have to see if the Federal Reserve is going to continue to bail them out for infinity. But on top of all of this, the US is facing huge geopolitical risk, and everybody is trying to fight for that number one position in the global economy now. And if the US does lose that top spot and world reserve currency status, everything will be over. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.